Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to bring you the market recap video for Monday, the 11th of April, 2016. It's a pleasure to be with every one of you, members of Tackle Trading and visitors of the Tackle Trading YouTube channel, every single Monday to bring you the recap for today in the market and kind of a look forward for the week that's coming out. I know many of our scouting reports do a little market projection analysis in the different marketplaces, such as the forex market, commodities market, as well as the stock and the options market. If you kind of see these reports here, you can see how Tyler does Tyler or Coach Noah both do a wonderful job in projecting out future expectation with the reports. Here's kind of Noah's bullish and bearish team this week, his stock picks analytics video, where he walks you through why those are the ones that he's looking at, where he analyzes kind of the broad markets and a technical analysis overview of the market there. So Noah and Tyler do a great job with the stock report, Gina with the options report, and then we have Keith King with the forex report, and Tim with the commodity report. So there's obviously those things out there as well. I'm here really kind of just to look at kind of the market itself. And let's go ahead and let's start a little bit with a heat map here. Let's go where it says Trade Center. And we're going to click on the heat map right here. And as you can see, that's going to pull up the heat map for the S&P 500. And as you can see, a lot of green mixed with a little bit of red and a little bit of black and a little bit of non-disclosure type colors. And what does that mean? That means really the market was kind of boring today. A little bit of up, a little bit of down. Advancers and decliners were very, very close to one another. Market ended up down just slightly south today after being up in the positive earlier on today. But what really kind of led the upward movement in the charge was at the very beginning of the day was financial and really kind of your basic materials sectors with your energy stocks as well. As you can see, like Citibank did very good today. JP Morgan did good today. Bank of America up close to 1%. Morgan Stanley, Goldman Sachs, Charles Schwab, the CME Group, LUK and whatnot, all up about 1.5%. 1.5%. Some of your drug stocks getting beat up as they have been accustomed to getting beat up over the last 6 months to a year, and then some in the oil and energy and basic materials sector as a whole did fairly well, but they were up really good earlier today before crude started getting pounded a little bit. We'll talk more about that a little bit. The reason I like the heat maps here is it gives you a broad view of the overall marketplace, real kind of high level, what's good, what's bad out there. You can see kind of the trends. You can change it to the different performances from 1 week to 1 month, 3 months, 1 year, year to date, P ratios, PEG ratios, earnings date. And that kind of leads us to the next topic that we have coming out here is earnings. We're seeing the official beginning of earnings season. With Alcoa announcing earnings here today. Alcoa reported better than expected earnings. You would think it's going to go up, but a lot of earnings these days are kind of, the funny math that the financial wizards of Wall Street and the financial services industries give us. But even though they beat market, not doing very well. As you can see on the heat map here, you have all the pink that is before earnings. You have a dark pink that is well before earnings, and you have kind of the blue and the dark blue after earnings. So as you can see, most of the market has not reported earnings yet. That's because earnings is really kind of just starting right now. Earnings season is now starting with Alcoa officially reporting earnings. Again, you never want to get caught not being aware when earnings is coming out. Make sure you're checking your companies that you own from an earnings position. Now, why is earnings so important? If we'll kind of take it into the marketplace, earnings are going to report a few different things. First and foremost, it's the number one most uncertain time in a stock's for the quarter on every stock. They're going to report earnings per share. They're going to report forward guidance. They're going to report revenues and whether they do good or not, if they do great or bad. If they do lukewarm, the market's going to move wherever it wants to move. Typically speaking, if the company reports knockout earnings, it'll go up. If it reports bad earnings, it'll go down. But that is typically speaking. Sometimes we understand kind of funny financial service math, and like Alcoa came out today. Alcoa came out today and reported earnings in anticipation for very, very, very strong earnings. It was up over close to 4% today, which is a really big movement for a company like Alcoa. However, if you look at the announcement after the fact, you can kind of see the initial movement came up because the initial movement was based on just the report. And basically what the report was, hey, listen, we beat earnings per share. We were expected to do 2 cents a share. We did 7 cents a share. But when you break it down, a lot of their profitability was through, some stock buyback, but also one-time charges like stock buyback. If you take those out of the equation, they didn't make any money at all. In fact, they did not beat expectations. If you look year to date over, you're looking at about a 15% decrease in sales from an aluminum perspective. And so when you look a little bit deeper than the headline, and the headline comes out and you see buying action, you look a little bit deeper than the headline and it starts coming right back down. And close to excuse me, close today around 974. It should open somewhere around 930 tomorrow, which is going to be around a 4.5% decrease in the price. So for everybody that bought Alcoa today, probably not the best thing coming into the open for tomorrow. About 25 companies report earnings this week, and those are your large cap stocks and above, mid cap stocks and above. If you're looking at next week in the market, and this week you're talking about some banks, you're talking some technology, you're talking Advanced Micro Devices, Bank of America, BlackRock, Citigroup, Delta reports earnings today. JP Morgan reports earnings. JP Morgan reports earnings this week as well. And so you got about 25 mid-cap stocks and above this week reporting earnings. If you're looking at next week reporting earnings, that's when the real kicker starts coming in. And you got about 215 mid-cap stocks and above reporting next week, and some big names that are reporting next week. Some pharmaceuticals, technological giants, those types of companies, they will be reporting earnings next week. So this is kind of the beginning of earnings. Now, the question around earnings is a couple different things. Number one, let's just think about it from an investor perspective. If I'm an investor in a company, let's say that company is Delta Airlines. If I'm an investor in Delta is reporting earnings right here, which is on the 14th. It's before the market on the 14th. Today's the 11th. So you're talking on Thursday before the market opens. So you need to make a decision on Wednesday before the market closes whether or not you want to insure your position. Now, obviously, where implied volatility is going to make a determination if that's expensive or not to really kind of insure that position. Volatility not being very high, the cost of options should not be a concern. So the only question really on this is the risk sufficient enough to not have any insurance going into a moment in time where it's a 50-50 crapshoot whether it's going to go up or down. Well, the question you have to ask yourself is, coming back to the recent earnings, you really didn't have a gap in price here. So really no gaps in price on this earnings. You had a little bit of a gap in price, but that was before the earnings, actual after announcement. No real movement in Delta on that one as well. Coming into this one here, you're talking no gap in price and a small gap from 43 up to 44, $1, about a 2% movement. So the vast majority of the time on Delta, nothing actually happens. And so because of that, I probably would not feel the need to insure my position if at all. But even if I did, maybe with some very, very out of the money type put options, a very cheap hedge against that. But let's say I'm looking at a company let's look at Amazon. Well, look at Amazon here. Amazon will move quite a bit on earnings. Amazon will move up from 480 up to the top at 580. That's a 100-point movement. Amazon will move here from 560 up to the top here at 620. That's a 60-point movement. So as you can see, Amazon will move dramatically around earnings. And so the question again becomes on this. Is it worth adding the insurance to protect against downside risk on something like Amazon? If you're going to be an investor in Amazon, I would suggest maybe look into perhaps insuring your position so you don't have to really kind of take the so you don't have to really kind of take the risks. Now, if you'll come over here, let's see if we can find a nice little video on insurance. Here's Trade Justice Portfolio Insurance. Here's some more insurance, portfolio insurance. Great article by Tyler Craig. Talked about it here in the market recap video. Coach's Show, where we talked a little bit about it. Portfolio insurance. There's a lot of different types of videos, write-ups, newsletters about adding portfolio insurance or protecting in some capacity. So if you look at here, just type in protection, portfolio insurance, you name it, you can kind of look at a whole bunch of different videos and articles over there at Tackle Trading so that you can kind of review that protected put option. Well, I'm sure we'll talk about it in the Coach's Show as well tomorrow. So on to the next kind of a point. So we've talked about the heat map, we've talked about Tackle, scouting reports, talked about earnings. Now let's talk about the market itself. Last week in the market recap video, we basically had and you can still see my Fibonacci drawn here. I basically said we're going to make a trade here over there at Tackle, guys. I'm going to buy oil. It literally was right here on the downward movement in price. I said I'm going to buy oil. As it's coming down. I said that in last week's market recap video. Next day, upward movement in price. Boom, boom, boom. So we kind of looked at this as twofold. We said, okay, if we're going to buy oil, and we were looking at, buying call options on USO, we bought them right on this day. And as you can see, from this day up until now, we're up about 14% on the actual stock position. However, we bought the options. That option position is up close to 100% already off that type of movement. And we also bought put options on UUP, which is an ETF that tracks the dollar index. And as you can see here, that was back into this range. Dollars down, oil's up. What a fantastic trade from last week's market recap video. Hopefully you all took advantage of that. I did pull off some of the contracts on both sides of the equation, both in terms of oil and in terms of UUP. Let's look at oil itself for a second. I saw it approaching, slowing down a little bit, that resistance on at 41. So I felt like maybe we could reassess if it does break out of this 41 barrier. I might reassess that trade. I kept about half the contracts on both sides of the equation, so I'm not that too concerned right now with oil coming into this resistance area. However, you might as well make a decision based on what you have at the time. And when I was looking at the trade, I had really good profit on the call options on USO. I had decent small profit on the put options on UUP, and I just felt like it was best to pull profit when you have it, based on the data, though, not just based on the P&L column. So that's when I look to pull off this trade. Here, I'm looking to reassess right now. If it does break out, fantastic. If it doesn't, then at least you locked in profit on some of your other trades. Looking at the dollar index, I'm a little concerned about the dollar. As you can see here, the dollar's at, let's switch this out to a weekly chart here, and let's get rid of the probability of expiring COMET. Sometimes, not a lot of times, but sometimes that does throw off the scale here. So let's go back down to a daily chart here. As you can see, the dollar index has been very consistent to the downside. If you look at just kind of recent history, it is at a low point at 94 where it hit back here in October, also in August, all the way back in June, and last year in May came into that 93, 94 mark. So really kind of we're at about a 6-7 month low right now against the other major currency pairs. And if you look at it from this moment on, it's already down $2.50 in that movement. It still has room to go. It could get down into 93. And I am kind of off the dollar the dollar, the pain train dollar that it's been since 2014, since we rode that puppy all the way through 2014, 2015, and even into somewhat to an extent in 2016. But dollar's showing tremendous amount of weakness, and the market just does not believe that the Fed is going to raise interest rates. And a lot of the dollar's pain train to put on the rest of the world's currencies is based on the fact that they were looking to raise interest rates, and now the Fed, in their cowardly behavior, is looking to basically give free money to Wall Street and the banks, and put middle America into their death crosshair to a certain extent. So they do. You got to take them for what the word is, and the word right now is they're not looking to raise interest rates. We'll see what they do in the future. But because of that, you've seen the dollar come down in value, and I expect that to kind of continue. However, this support level is at 94 on the dollar index is very, very important. And as you can see, it's starting to hover right at that same resistance level upward on the euro dollar. And if you look at the dollar JPY, you're starting to see a little bit of a overextended to the downside on the Japanese for the dollar against the Japanese yen. So with the dollar at support and a lot of the currencies overextended at resistance or support, you could expect maybe a short-term action upward movement in price on the dollar. Perhaps that is not longer term. I don't think the trends are going to change or anything like that, but at the same time, you might expect some upward movement in price on the dollar index itself. Now, finally, the S&P 500. The S&P 500 showing resolve and weakness on the same weekly chart. I said it was slowing momentum this week. I see no reason to get off that. I see a lot of consolidation, a lot of neutrality as well, and I foresee that coming into the rest of the week. However, things that could impact that are maybe perhaps retail sales, the PPI report coming out of on Wednesday. You also later on this week, you also have the CPI report, as well as the University of Michigan Consumer Sentiment report. So you got 4 or 5 economic reports that could break the neutrality here. But I'm seeing some sell side type momentum coming into the chart, and it still would not surprise me if we do see that retracement. I do think that's a higher probability in terms of whether it goes up or down. But right now, I got a zero bias on the marketplace. Definitely neutral. Sell those call options. I said that last week. Hopefully you listened to me, and you got a week of free call premiums. That's why you watch the market recap videos, even if it is 17 minutes long, ladies and gentlemen. Also, last certainly not least, check out a couple of the central bank's monetary policy from this week. You have the Canadians reporting monetary policy on Wednesday, and you have the British reporting monetary policy on Thursday. That's going to impact both those currencies, including the dollar, which means including everything else out there. This is Matt Justice. We are Tackle Trading. If you're looking to get in the game, get in the game with us. One trade at a time, changing lives every day. TackleTrading.com. If you like the video and you appreciate all the help we provide on a weekly basis for all of you investors out there, make sure to take one extra second and hit that nice little thumbs up there for YouTube. Just tell the listeners that they should pay attention to Tackle Trading. Thank you guys. We'll see you next week.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.